Sorry about the delay. Screen issue. Good afternoon, everybody. How are we all doing? What's up, Eddie? What's up, Min? Sure here. Did you overtrade today, Sharir? Good afternoon, Tom. Aw, Josh, you're so sweet. Good, Sharir. Good. What's up, Nick? Good afternoon, Ben. What's up, Bandit? Glad to see a bunch of you guys stuck around despite today being pretty slow. At least for the indices, there's a few names that were certainly moving that could keep you engaged. All right, let's hop in. I'm an associate member of T3 Trading Group, which is an SEC registered broker dealer and member of FINRA SIPC. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. There's the position disclosure. I'm done losing money in every put that I bought for earnings. They were all small. But yeah, my options win rate is 1 for 5, I guess now. Only thing that I was able to make some money on is that lucid covered call. And that almost got called away from me there. That was fun until it closed on Friday. So I just still have a couple of those covered calls. I also, oops, I didn't take off Amazon or plug. Let me fix that real quick. I am no longer in Amazon. I am no longer in plug. Everything else is good. All right. Let's hop over to the meeting. We had a really strong close. SPYs closed up 0.25%. The Qs closed up 0.17% here. And the IWM is the real leader, up 1.25%. You can see it while I still have my charts up. Look at this rally in the last 10 minutes. We moved in the last 10 minutes today pretty much as we moved the entire trading session combined. It was a really boring day. We had that little bit of a gap up this morning for the SPYs that, fell apart. I remember this being a 5-minute candle to take notice of, right? Kind of similar but different to Thursday's daily chart candle that I've been talking about. Thursday's daily chart candle is a bearish candle to take notice of, bearish engulfing candle. This 9:55 a.m. bar for the SPYs was notable. And I was saying at that point after it formed that high is really important, that bulls want to negate it in order to be able to attempt to push higher. Bears don't want to let you negate it if there's going to be any chance of a rollover today. And we kind of negated it, and then we did absolutely nothing for the rest of the day. Sideways price action with maybe a little bit of a grind down. We had some weakness in mega cap tech, a lot of strength in certain growth stock issuances, strength in like energy and financials. Financials are okay. They were stronger in the morning and rolled over a little bit. But the market itself doing pretty much nothing. The Qs, same deal. Week early, they did push through the inside day high, but immediately fell back down. It was the same thing, like this, 950, 955 combo of a couple candles was really important for the bulls to not be able to negate it. They never really fully negated it with this bounce, but we did nothing for the entirety of the day. In the last 10 minutes, we had a pretty rip-roaring rally. And the IWM is where the strength is at. XLE was really strong today. Again, some of these growth stocks that will sometimes be moving with the IWM were really strong today. Right away in the beginning of the day, the IWM was strong. Second bar, we had a pullback to equilibrium, but we pivoted there, snapped right back up with this inside 5 and up on the third bar into the fourth bar. And then we also went sideways. But whereas the SPYs and the Qs were like a little bit of a downside grind in their sideways action, the IWM just held up like an absolute champion. And I was saying it in the beginning of the day. When we had the SPYs at 9:55 give that like candle to take notice of, and the Qs kind of being weak at 9:50, 9:55, the IWM was so strong at that time. That same 9:55 candle was just a little pullback to technical equilibrium. And it was at that point of the day where you're looking at the SPYs and the Qs that could fail and really roll down, and the IWM that's showing a lot of relative strength. What had to happen there is that this IWM chart either needed to totally 100% fail, or if it didn't, then you couldn't really expect too much downside follow through from the Nasdaq or the S&P, and that's exactly what happened. Saying it pretty much from the beginning of the day when we saw some weakness in the Qs. I feel like I saw some weakness in the Qs even off the first 5 minute bar that had like a little bit of an upside tail, but with the exception of literally one trading day in the year of 2023, we have not seen it where the Qs have been able to have like a major sell day with the IWM holding up. So most of the time, if we're seeing the Qs being relatively weak, but the IWM is trading really well, like it did here, you can have that relative weakness continue throughout the day in the Nasdaq, but you never get a major breakdown. And that's pretty much exactly what happened. This IWM was so strong, and the Qs, yeah, were looking weak and looking particularly weak here at 9:55, 10 a.m. And they stayed relatively weak all day. I thought we were going to get a negative close today if it wasn't for this last 10-minute rip. Um, but you don't really get the market rolling over and really breaking down with the IWM showing that type of strength. And the Russell just looked great. Russell looked great all day. But let's go over to the daily charts here for the market and get an update on this picture. So we spent a lot of time in the morning meeting today talking about Thursday's penalty box candle, a day to take notice of, negative Maribozu, false breakout, high volume candle, total failure on that candle, but still within the confines of an uptrend. So while this is a candle to take notice of and could certainly mean further corrective action, I'm not the type of trader to call necessarily a reversal off of it. Though I did certainly say Thursday into the close, I wouldn't be surprised if we look back in a couple of months and see this be like a major turning point from the market, just because of the other pieces of information that we've been looking at, like the market dynamics, market positioning, coming into these news events, the fact that we sold off on Thursday off of a news event, and this earnings season. I certainly would not be surprised if this became like a real top, but we are in an uptrend. And the thing about trends, I can tell you this from experience, is that trends tend to last for much longer than you expect that they will. And that's been a pretty consistent rule over the course of my trading career. I think that most people who are managing money are shocked that we've come even as far as we've come. And that's why you've started to see a lot of these analysts really finally now kind of change their thought process and change their opinion, which for me, if anything, actually makes me a little bit more nervous on the upside. But this market trend is fully intact. We had this um, penalty box candle on Thursday, but then on Friday that was followed by an inside day. And we know that one of the ways in which a negative Maribozu can be negated is through an inside and up. So coming into today's trading session, the question was, do we get an inside and up that leads to a negation of Thursday's high? That's really the question. And for the SPYs, I guess we did get an inside and up because we closed really strong, so we closed just above it, but that wasn't enough to negate Thursday's high. So that still hasn't fully happened yet, but bulls are doing a fantastic job holding this market in. For the Qs, we're pretty much sitting more or less right at it. That high from Thursday is 384.71. I think we closed just below that today. We ticked above it briefly at one point. And the IWM, which is just such a market leader here, and when this is going, it tends to mean that breadth is really good. The IWM just giving this fantastic inside and up, getting back above 198, getting back above Thursday's high. It just looks fantastic. And when I was saying in the morning meeting, first of all, I always think it's okay to have an opinion about the market, but make sure that if you're creating that opinion, that the market technicals are actually confirming it. And I know for myself, developing a qualitative thesis, developing an opinion for the market, and then having the technicals confirm it, when the technicals confirm it, that's when I do best as a trader. So when I have my most conviction. When I have my most conviction, it means that I put on my most amount of risk. So, for I guess a bit over a week now, I've started to turn more bearish in terms of that kind of qualitative fundamental thought process. But what I keep saying is I need the technicals to confirm it. And if the technicals don't confirm it, well, I'd rather be long than be short in a bull market, even if I think the market is too high or should go down, or whatever whatever nonsense I want to justify for myself on it. So you gotta stay nimble in this market. And as the more time that goes by, if we're able to continue to hold up here, the more bullish I need to become again. Because the whole, thought process on the bigger pullback was that we were going to be having some of these events that acted as a catalyst that could potentially break the uptrend that we've been in. And breaking an uptrend doesn't even necessarily mean that you got to go down huge. It just means that you're no longer trending higher. It also means that you could go sideways. So we got through a lot of those catalysts pretty much unscathed last week. Maybe not fully unscathed because of Thursday's candle, that penalty box candle. I really thought Thursday was a very important trading session, though the IWM has already said it's not important. Thursday being the day after the Fed, that's the day that the market digested the Fed. So, we kind of sold off on that event, but then we ended on it. We got through Fed, we got through the GDP last week, got through the PCE last week, and the other kind of major catalyst that I was looking for as something that could potentially set us off to the downside is these earnings reports. And the fact of the matter is, on average, thus far, the earnings reports have been absolutely crushing it. And you look at like that Google report, which I was looking at a little bit over the weekend again. Look at Meta report. Um, some of these earnings reports that have been coming out. Roku, just phenomenal, phenomenal. My whole thought process is that if we got stuff that was in line, that we could sell off on it. Well, the stuff's not coming in line. It's really crushing some of these earnings reports. We still have Amazon, we still have Apple, and we'll see how those play out. But the more time that goes by, now that we got through a lot of the event risk from last week, and we've gotten through at least the first series of these earnings reports, and they've come out great. The more time that goes by where these technicals stay intact, then any short thesis that you want to have at a certain point goes out the window, and you have to be able to be nimble enough with it to recognize that the trend is intact and you're getting an inside day and up in the IWM like we got today. There was good money to be made in certain issuances today in certain stocks to the long side if you just weren't afraid to take the trade. And we had some good calls. SoFi, if anybody was able to sneak in any of this off that $10 area that we discussed in the meeting, they actually gifted us with a pullback to 1030 or so right as the market was opening. So it wasn't impossible to be able to get stock. I think when we were doing the morning meeting, it was at like 1075, which is a little bit high to pay up. 1030 might have been a little bit more doable. I'm not going to say it was an easy entry execution. I don't think it was. And for me, it was really more about position management because I've been swinging this position for a long time, and I've had a price target of $12 on this thing for a long time, and we're finally getting up there. Um, but if anybody caught that, it was great. The other one that I ended up focusing on was Nikola. A little bit of a cheap, boring stock. I don't, maybe not boring, but certainly a cheap stock. I usually don't like trading these ones that are, priced below $5 because you just have to take so much stock in order for it to be worth it. But Nikola had some news, potential short squeeze through that resistance with an inside and up there and a really high short float. So this one kind of became a focus for me. I was able to get in around 240 or so versus I think lows. So I had like less than 10 cents worth of risk. And it was one of you guys called out that pivot. The first candle was a little bit sloppy, wasn't involved. Second candle created a pivot off the ADMA, and when I got involved in the third candle, it was starting to work its way back up. So I think I got like, I don't know, 240, 242, something like that as my price versus this low. And caught a pretty big percentage move. I mean, stock closed up 8%, and that's after closing off of highs. So I liquidated that position in the close, decided not to keep it because it closed off highs, and I don't really want to be adding a lot of long portfolio risk. But there was a lot of stuff out there that was similar to this that was going. AI got mentioned in the morning meeting. Someone asked about it, and I said I like to along through 40, even though generally it's been this 42 to 43 area that's kind of been the big resistance for this stock. I thought with this tighter inside day, if this thing woke up with momentum, and especially we saw some of the other AI related names like a Palantir or an IonQ acting strong pre-market, that made me like this AI. So I thought you could get a jump start at 40. I had my hands full off the open and I missed it. But this is another one. If anybody got stock off of 40, I mean, pretty low risk for the way AI trades, and that one worked phenomenally well also. Um, so you had a plug was another one. I liquidated my plug position today. Plug just a massive, massive upside move. So you had a lot of these growth names really kind of running. You had energy acting really strong, primarily through the gap and the initial upswing. XLE here is up 2% in the close. Chevron, which has been a focus for me, got that Goldman upgrade. It finished up 3%. Traded more in line with the XLE. So I sold some of my position into this move. But then you had real weakness from some of these FANG names. I shorted Microsoft as a momentum short through this 336 here and was kind of breaking these tail lows on this 9:50 a.m. bar. And that gave pretty good immediate downside follow through. And I feel like if it could have had any help from the market, which it didn't because the market just went sideways, this thing very easily could have been revisiting 330 today. So that was a good little day trade, and the weakness in some of these big cap tech stocks enabled me to be able to continue to trade this like QQQ short that I have via the T triple Q, and you know finish up some money in it, even with the really strong close it had, and with the fact that I swung some, I was still able to make some money short the Qs just from kind of working these intraday ranges here a little bit. And I was a little bit excited. It would look like we might close on lows, and then of course we ripped that last 10 minutes. But um, yes, that's pretty much the indices. The IWM looks incredibly bullish, which bodes well for the market as a whole. We still need the S&P and the Nasdaq, I think, to fully confirm that they can break above Thursday's high. But you break above Thursday's high, and you get through Apple, Amazon this week, and AMD. We'll throw that one in there too for tomorrow. I mean, what do you got left that can actually bring this market down? We're getting through all the events, unless it's just, August trading hits or something like that, and they sell the market a little bit. But I don't know. We're in a very clear and steady uptrend, and you don't want to overly fight it. And the way these earnings reports have been, if that continues to be the same path, if we continue to see more of, Google and Meta and even the Microsoft report wasn't not atrocious, though you had a little bit of weakness off of it. If the worst you can get is like a Microsoft or a Tesla or a Netflix, which really were not that bad, it's gonna be very hard for this market to break down. And then you got to remember that the trend is your friend, and it's certainly very possible that we could continue up. So with that said, I still am short U Pro. I still am short T triple Q. I still am piecing out of my longs into this up move. I'm still very nervous right now to be aggressive on new longs, but I have to maintain mental flexibility, even though my brain is broken today. And if the market technicals are getting above, and I had a thesis that it could be the Fed from last week or these earnings reports that could actually roll us down and we get through it unscathed, well, then you have to readjust the thesis. So that's where we're at, and that's all I got. So I'm happy to answer any questions that you guys have. Scrolling up, first I see is from DJ. When you start a counter trend extension trade with a light feeler, then get heavier when a signal comes and set your stop, is that stop for your entire position, or will you keep your initial lighter position if you get stopped out? I do both. It kind of depends on the situation, to be honest with you. Sometimes I'll keep that initial lighter position, get stopped out of the heavier position, but I want to keep it and kind of stick with the idea a little bit and continue to watch it. There are other times where I feel very confident that if that after I've sized up, if that next stop triggers, that it's just totally proven that my idea is wrong and I want to liquidate the entire position. So I certainly do both, and it depends a little bit on the situation. And it's a good question, so I appreciate it. Uh, Next here from Rex. The market created inside day on Friday. I thought that was very bullish. This morning I was looking for NVIDIA for the inside day and up. Sure, that was something we mentioned in the morning meeting today. At 9:35, I saw that NVIDIA created an inside 5 with relative strength below 427. An inside 5 with relative strength below 427? Maybe mean, not sure what you mean. Price you mean there. But obviously it's this inside five. Maybe we're talking about just 470. Um, so I took the trade. I noticed that Ben also talked to you about that trade as well. Although you said you think the trade could break either way. I was talking about the daily chart in the morning, but I didn't take it. At 9:45, the Qs broke out at yesterday's high and then failed back down. You took Microsoft short. My question is that the market seems very bullish to me, and what factors would make you be selective and decided to short Microsoft instead of long another Nasdaq name? So basically, the question is, you're viewing the market right now as bullish, which means that if you got a relative strength setup, like how you're viewing NVIDIA, or a relative weakness setup, like how I viewed Microsoft, you would rather take the relative strength setup in NVIDIA. Why would I rather take the relative weakness setup in Microsoft? And I guess that comes down to the fact that I don't fully agree with you on the market being very bullish because of an inside day. It's only becomes very bullish if the inside day is really breaking to the upside, which again I know the Qs did break up, but also there has to be a catalyst that negates Thursday's high. The only reason I care about this inside day breaking up, the only reason why that's even important to me at all, is because it negates the Thursday candle. So it's very hard for me to be full on bullish until we are kind of negating Thursday's high across the board. And if anything, I'm still kind of have a bearish mentality right now about the market. So by the time I was getting involved in Microsoft, let's see what time that was. Microsoft at 950, the Qs were kind of already coming back down and might have been showing us some sort of push through failure on that inside day. And the Qs at that point were relatively weak to the IWM. The thing I was fighting for sure though was the strength coming from the IWM, which was just phenomenal. Not that I'm fighting it necessarily, if the IWM is strong, and I'm sure Microsoft is not necessarily fighting it, but it does go back to what I was saying earlier about it's very hard to get a real market breakdown if the IWM is holding up. So that was certainly a layer of probability against my trade. I did also take that Microsoft trade very small, which I called that out, which is done for a number of reasons. One is that I don't feel like I have every layer of probability on the side of my trade, so it's certainly not an A plus. And two is from a portfolio perspective. At this point, I'm like, especially at that time, a little bit less so now. I'm like really heavy in this T triple Q short, which I'm certainly managing, and I'm up pretty good money in it at this point, considering where I started shorting it and what my position size looks like. I'm up pretty good money in it, but I just had to have enough size there where I was like, I don't really need this Microsoft trade, but and that's kind of how I like Upstart. I almost shorted Upstart today. It would have paid me. I didn't because I felt like I already have a lot of exposure to the short side, or even that Palantir trade. I thought about shorting Palantir in that $20 area. I know Sharir took it, but it kind of the same thing. I feel like I already have enough short exposure on. I don't want to just start shorting every stock on the market when we're still in an uptrend just because I've got a thesis that's become a little bit more bearish. That would be the opposite of what I was just talking about, right? Letting the technicals confirm the thought process. And I still think that Thursday's candle is this day to take notice of. It's this penalty box candle, and I don't think that we're outright bullish until the market negates that entirely. Though the Qs attempted to do it today, and the IWM certainly crushed it. The IWM crushed Thursday's high today. So, thank you for question number one. I see you have question number two. How do you deal with consecutive days of losses on your emotion and in trading? Um, what would you do when every trade you took gave you a setup and it turns around immediately, stops you out, and then goes? Sure. So the first thing I want to do in those situations is kind of check my premise sci. I want to make sure that um the reasons and the game planning and that everything is clean as per my edge on my actual trades, right? And then did I make any mistakes on those trades? And if the answer is no, then sometimes probability will just go against you in trades and you have to move on. So it's really the number one thing that I'm asking myself is not you can't judge yourself based on making money or losing money. You know, making a small amount of money or losing a small amount of money or whatever it is, or having a failed trade or having a successful trade. You need to judge yourself based on the process. So the question is my process sound? Now, I personally will certainly have issues where, you know, trading psychology or whatever it is, and I get in my own head or I start making mistakes. I do that. So that's a different situation than if I look through every trade that I took and I feel really happy with what I did and they just didn't work. Um, if it's that first situation where I'm not trading well, then I need to take a half step back. And what I do, I just always remind myself, you know, I know how to make money trading. I know what to do in order to be able to make money in this business. And all I need to do is do the right things consistently over time, and the numbers will be what they will be. And based on that thought process, as long as I am actually doing the right things consistently over time, I really don't care what the P&L is. You know, you trade long enough, and we work at these probabilities. You will just have streaks, little streaks once in a while where you had a series of losing trades or a series of losing days. It shouldn't happen that often, but by definition of how probability works, it will happen. So again, are you doing the right things? If yes, continue to do them. If no, then make the necessary adjustments. Thanks for the questions, Rex. From Cameron, do you trade secondary plays like Roku? Of second day plays. Uh, if if so, how are you trading them? If not, why not? I usually don't like trading day twos. I don't like trading day twos. I feel like I have a bad risk reward by that. I mean, you do. You inherently have a worse risk reward and lower probability of success if you bought Roku at 92.50 today. And looking at the chart, it would have been a great buy. You know, you would have made whatever this is, $4 or $5 on your trade. And you can certainly get those day twos. For me, at that point, you're entirely looking at the small time frame for like momentum scalps, which really isn't the way that I trade. I don't like trading day twos because you inherently have a worse risk reward and probability of success. A day two can certainly happen, but just as often as you get a day two to the upside like Roku, probably even more often you get a day two that's just like a nothing day. It's a nothing burger. It's a rest day. It's sideways. It's an inside day, or there's a tail above yesterday's high and it comes back down and it kind of does nothing and shakes everybody out in every direction. I think you see that a lot more on those day twos than you actually see the continuation on those day twos. And for me, because I try to base everything I do off the daily chart and then execute off the small time frames, the problem with the day two is that there's no daily setup on day two, or rarely. Any daily setup that was there got, you know, triggered on the day one. And that's where I want to have stock from. Obviously, you know, hindsight is easy, but I want stock from the $79 breakout from Friday in Roku that I kept overnight because it closed at 90 and still have as it got to 96.50 today. That's the stock that I want to have. That's great stock to have from a great daily point initial entry, and I want to just continue to get paid on it. Fighting the stock on the second day is so hard. Sometimes they go up, sometimes they go sideways, sometimes they pull back. What did Intel do today? You know, I mean, Intel on the other hand is actually a really big pullback. But it could pull back. I just don't feel like I have the same advantage because you're dealing with a larger degree of extension, and I can't trade to be right or wrong with that degree of extension unless I'm shorting actually and going the other way, which you got to be very careful on doing. And the risk reward on the daily chart, the risk reward on the daily chart on Roku is atrocious. And again, I would not, and neither would you, buy Roku with a daily stop loss. The daily stop loss options are basically you could use the 79 that it broke out from. Honestly, though, the real stop in Roku, if you wanted to go long right now, would be yesterday's low, would be Friday's low. I'm not buying 92.50 versus 75. You know, what type of reward do I need? What type of reward do I need? I need to move to $150 in order to make it worth it. It's just too much. So that's my thought process there. coin moving after hours? Yeah, coin looks like got hit back down a couple bucks here after hours. Coins all over the place. Cool. I got through the VTF. Let's take a look at YouTube. See what we got in here. Coin trading lower after Ripple ruling on crypto rejected by federal judge. Thank you, Robert. From Kevin G. IWM with its recent strength, is it easier in your opinion to just trade IWM? Sometimes it feels I should be looking for a stock within its holdings as opposed to the actual ETF. It's difficult because there's a lot of stocks in the IWM. A lot of times if the IWM is moving, you'll see like the XLE leading, which happened today, and you can look for that. I don't like the idea of just trading the IWM. One is because the IWM hasn't always been in play. This market has been consistent bullish rotation. The IWM gets extended. When it starts resting, the Qs go. The Qs get extended. When it starts resting, the IWM goes. It gets extended. It rests. Then the Qs go. And that's just been rinse and repeat for months now. That will change eventually, but I can't tell you when. But that's been I mean, and that's the hallmark of a bull market. It's literally called a bullish rotation. The stocks that get extended, they rest, and the next stock catches up, and then that one gets extended and it rests, and then the first stocks catch up. So that's kind of what we've been seeing more than anything. But wherever that relative strength is that day, wherever the setup is that day, that's probably where you want to focus. And we've done a really good job as a team in the virtual trading floor recognizing like, okay, the IWM is set up to go and the Qs need a break, right? And sometimes even like, wow, the Qs are $10 extended away from the ADMA. Let's build into some shorts while the IWM is breaking higher and is moving, and some of those growth names or some of those energy names are moving. So there's been a lot of that also, and that's great. I love that type of environment. All right. Looks like I got through everything on YouTube and on the virtual trading floor. I'm gonna wrap it up. I gotta catch up on some sleep. I didn't really sleep too much to begin with last week, just with the time zone differences, and then that last minute red eye I took back to New York because my other flight got canceled was really brutal. We got a couple hours, so I'm gonna rest up. Um, Thanks, guys. Really good day today. Hope everybody made some money, and we will see where we're at tomorrow. Good night. I ended on the VTF, but I'm still up on YouTube, and I see Chris K on YouTube sneaking in a question, so I will try to take a look for you. Yell, YELL. Oh, this thing had a big run today. So you're looking at a pullback in this. I don't know what this company is. I don't know what this company is. It's coming from an all-time low. I don't know if this is a company that should be going bankrupt and is having a short squeeze here, or if there's news. This is the first time I've seen it. $1.40 looks like a little bit of a level that you could potentially pay attention to, but I don't have a strong opinion on a stock that I'm not familiar with. Appreciate the question there, Chris K. No problem. Have a good night.